What's going on, everybody? It's Jeff here. Welcome back to the channel. No, guys, I did not get abducted by aliens. I did not get bought out by the hedge funds, and I did not fall off the face of the earth. As some of you guys in my comments and messaging me asking where I am, I've stated multiple times that I am taking a little bit of time away. Does not mean I am not following everything or still here with you guys. I just don't have the time or accessibility to be able to make as many videos. As of right now, things will change. Obviously, my little man is almost 5 months, and obviously as he grows up, there are a few more months, I'll be back here in a much bigger facet. But we have a lot to discuss in this video, as a lot of things have happened with AMC since I've made a video. So let's get right into it, guys. Before we do, I want to kind of do a little bit of circling back and talk about these two charts. Okay, so if you remember my last video, which is probably close to a month ago, I had stated, even though an individual that was related to the court had made the recommendation, okay, for the judge to approve, okay, what AMC was trying to do, okay, and go through with that process, the charts were not lining up, right? The stock price of APE and AMC were not lining up. And as you can see, if you remember all the way back on that Friday, the 21st, the first denial of the proposal had come out by the judge, right? So you immediately saw APE begin to sell off as investors thought, listen, if they can't convert it, they can't raise capital, it's just going to be worthless. And AMC squeezed up about even just more than 100%. Okay. And like I said, going into that, you would start to feel that these two stock prices would be a little more aligned. Now, before we get into other things, this is a similar thing that I am seeing as of right now. Okay, so the approval has gone through. We have the dates that are set. All of you guys know all of those details. I'm not going to cover them, but you're still seeing this price discrepancy, which is the same thing that I talked about weeks ago. AMC is currently trading at 350. APE is currently trading at 210. If APE is going to, right, go into AMC, merge into AMC, okay, then you would want to see these prices become a little bit more in line, and you're still seeing a bit of a discrepancy. So what does this indicate? I don't know, obviously, okay, right? I can't predict the future, but it is giving me some indication, and I would not be surprised if there was a last minute or a lawsuit already brewing trying to stop this one more time, right? Now, the judge already did approve it. I do think the chances of that happening are probably, are definitely less than what they were. But just seeing these price discrepancies, it would not surprise me. AMC even popped up to, I think, about $3.80 as of today, really widening that gap even further. Okay, so just keep that in mind going forward. I mean, people are posting all over Twitter like, oh, well, I'm just going to buy a ton of APE because I'm buying it at $2.10. And like, once they go together, then it'll be like $3 or whatever it is. And I'll make 50% of my investment, just because the market is not that easy. Okay. So just keep that in the back of your mind. I said this same exact thing when everybody said the recommendation that it was going to get approved. And that's exactly what happened. And like I said, it popped 100%. So keep that in mind. Not saying it's going to happen, but when you're seeing price discrepancies and differences like this, it is an indication that could happen. Okay, so now let's get into some other topics that I want to discuss. Right, I'm not going to go into the details, guys, because everybody else has made a video talking about this and they're giving their opinions. I just want to talk about, obviously, what I do with every single video, the positive, the negative, and kind of give you a perception of both. So what's next for AMC after court approval of revised stock conversion plan? This goes into details, talking about the 8K, talking about what it's going to look like, right? So we also have this reverse split happening, all right? And I want to talk about the numbers specifically, because after reading balance sheets and really getting from a fundamental standpoint, that's what I want to discuss, right? When it comes to, if the shorts are going to be forced to cover, and are they going to, and so forth, and what the new FTDs are going to be, that is a topic for a different time, right? That is something that that has not been foundational. It hasn't been foundational throughout the past 2 years, right? So when you see people making these videos, shorts have to cover in 35 days, of the same people making the same videos for the last 2 years. And clearly, guys, here we are. So here we are, right? 52 million shares, roughly 52 million shares are expected to be held after the 10-to-1 split. An additional 7 million shares, obviously that's because that's 7.5-to-1. So now we're totaling at about 59 million shares, right? Off that original 590 million shares, 10-to-1 split. Here we have 59 million shares. Now, separately, you have almost 1 billion ape shares outstanding, all right? Now, they're going to convert roughly to 100 million. That's the 10-to-1. Totally different than the reverse split. I see some of those guys kind of getting that confused, right? So now you're going to be roughly 158 million AMC shares, okay? So it's going to be 158 million AMC shares trading at roughly, my guess, probably around $30 to $40. We'll use $30 as a safe bet. Okay, I believe there is something in here. Yeah, we expect AMC and ape shares to converge around $3 in the conversion. That's obviously it's an analyst from Wedbush, but let's just use that $30, okay? 159 million AMC shares, $30. The reason why I'm repeating a lot of this is we're going to get into some math here, okay? 159 million shares. There's 550 million additional shares to dilute without shareholder approval, okay? That is more than 3 times the entire float, okay? So the power of what this 550 million shares can do to an already somewhat diluted market cap can be very detrimental. Okay, and I'm being honest with that, right? Right. So Adam Aron really needs to be careful on how he does these offerings. Now he's stated, okay, that he's going to drop 25 million shares. It's going to be an at-the-market offering, okay, and hopefully it's not going to be instantaneously. It'll be trickled, but he has mentioned that 25 million share count. Okay, so let's just get into what that potential could do for the stock price. Now, before we get into any of what it could do to the stock price, let's talk about the positive, right? We got 25 million shares. If he drops them on the market, okay, let's say for $30, I want to go a little on the lower end here, all right, potentially even less, it's going to raise $750 million worth of capital. Okay, $750 million. Now, that is a good chunk. That is close to roughly, guys, 17 to 18% of their entire debt service. That is very powerful, okay? Especially, like I said, because of just what their short-term debt service is, and because the way commercial debt rolls and interest rates rising, that's going to be very beneficial for the short term. However, they still have a long way to go. Now you think to yourself, okay, well, there's 550 million shares available. If he drops this, 7-8 times, he'll be able, maybe a little less than that, pardon my math, but let's just say, 7 times, it's only 175 million shares, okay? We'll be able to wipe out all the debt and move forward. Here is, and that's positive, guys. I don't understand. That's positive, 100%, right? Because then you're going to say, well, what's the short thesis? And that's what everyone talks about, the short thesis. What's the short thesis? Well, if we get rid of that debt service, if there's no chance of bankruptcy, then that gets rid of the short thesis. And you're exactly right, and that's very positive. However, you always have to look to the other side. This is why I talk about both sides in the video. What is also the long thesis, right? So let's take a look at numbers just a bit further. And we're sitting at AMC right now and what the overall market cap is. Now, if you go and you look at this, it's about 5.57 billion. Let's just run the numbers a little bit differently right now, just to give you a little bit more accurate of a number, right? So we get 352 520 million shares, okay? I think that's going to be brought up to a little bit higher. That's sitting about $1.8 billion market valuation for AMC, okay? And Ape right now is sitting at, I believe it's a little bit over $2, and they have 1 billion shares, so that is 2.1 billion. So we're sitting at like 4.2 billion market cap as of right now. I know Market Watch does show it to be a little bit different, but the math just doesn't line up. But we're going to use between a $4 to $5 billion market cap, right? So $4 to $5 billion market cap, and we're sitting at $30 per share. Let me get rid of this. 500 million, 1, 2, 3, 1, 2, 3, 400 or 4.5 billion market cap, $30 a share. What is going to be the impact of raising $750 million off of the 20 or 25 million share price? Hope not losing you guys, right? So we have a 4.5 billion market cap, and they're going to drop 25 million original shares. That's $750 million the capital raised. What is the offset going to be, right? Because when people are talking about this and they're saying, oh, the offering that they're going to do is only going to be 25 million shares out of the 550 million shares. That's such a small percentage. But what effect does that have on the market cap? And the reason why we focus on the market cap before I get into what that effect is going to be is because, guys, that market cap cannot just move out of thin air. AMC is not a stock like Nvidia that is going to have a 400, 500 price to earnings ratio because it's a tech company and it's valued off of future revenue. AMC is not a company like that. It's valued off of revenue as of right now, what their debt services is, what their cash on hand is, what their margins are, what their price earning ratio is. It's like simplest of balance sheets. There's no forward looking when it comes to a company like AMC. I'm not talking about AMC, I'm talking about the business that they're in. Okay. So when you think about that, what's the effect that it's going to be? This is almost 20%. 750 million is almost 20% of 4.5 billion. They're not going to be able to just raise that market cap. So that's when the share price comes down. That's when they talk about dilution hurting stock price, right? So picture this, right? If you have something that's worth $1,000, right? And you have someone gives you $100 bills, and you need to, break that up into, let's say, I don't know, $10 bills. Well, it's going to be 1,000 $10 bills, right? Just because you're going from 10 $100 bills, right? So think about, shares of a stock, and you cannot increase that load of $1,000. You're not just going to go to 100 $100 bills. You're going to go or 100. You're going to go to 100 $10 bills, right? So that's where the dilution comes from, and that's where that share suppression comes from, right? So it's going to be very interesting to see exactly what happens in the short term and in the medium term. And the reason why I'm saying that is short term is what I covered at the beginning of this video, this price discrepancy, and I'll continue to make as many videos as I can if something does get dropped on this. I could be totally wrong, guys, obviously. Okay, but it does seem that there is a little bit of hesitation, especially within the price discrepancy. Okay, and then also in the medium term, what is the effect going to be? How much pressure is that going to put on AMC stock price once it does reverse split? You have the 25 million, offering, which could suppress it somewhere around 17% based on market cap value, and also that ever looming 550, right? So like I said, even though you don't have that short thesis anymore, which is what everyone's been focused on, what's that long thesis going to be, right? Who's going to want to be able to get into a company where you have so many outstanding shares and a company that has so much debt to where it's just going to drop it at the second it begins to rise? All right, last thing I want to cover in this video very quickly, I know this is dragging on a little bit longer than I normally make videos, is people have talked about, last time the dilution is what ran the stock price. But if you guys remember June 3rd, right, pre-market, I'm pretty sure it was either June 2nd or June 3rd, but pretty sure it was June 3rd, pre-market AMC ran up to $77 a share, okay? And on that day, you go back and look at the chart, okay, on that day, or maybe it was the day before, but $77 pre-market a share, and before market open, Adam Aaron dropped the rest of the shares he had available. It was an $11.5 million offering. The stock price went from 77 down 50% to about 36, 37 bucks. Could be wrong, but close to it. And then it eventually popped back up, retested some of those levels about at 68, and it never got higher than that again. Okay, so just remember, it needs to be able to break certain levels, right? So if you're in this, then this information is good for you to know. Okay, if you're not in this, if you're looking to change your position in this and so forth, then wait for that certain criteria to meet whatever it is, right? So if you're not in this and you're immediately thinking like, oh, I'm just going to smash it and buy ape, just know that there is risk to that because, like I said, you're seeing that price discrepancy, okay? If you're already in it, like I am, I'm still holding with you guys, I've showed my position many times, guys, I haven't changed, then therefore you'll know all of the facts. So guys, that's it for this video. I'll see you in the next one.